All right, welcome back. Ahead of the big debate now, a lot of questions as to what will probably happen here and what's going to have to be digested here and what they're going to have to say here. We got Jonathan Hoenig with us. We got Howard Rosencrantz with us, Ben Ferguson, and you want to show that guy? Or not, we don't, just show me, because I like looking at me. Lizzie, Wicked Snot McDonald.
Oh, God, help us.
All right, Lizzie. You've heard it before. The market's already factoring a severe recession. It's no longer about the rescue. It's about the recession, is it?
I think it is, unfortunately. And when you see these dramatic moves to the downside, in other words, massive volumes at the end of the trading day, that's herd mentality. That's a bum's rush to the exit. And it's, Neil, we're seeing these bear market swings we're seeing are worse than ever before. Historically, bear market swings 300 points or more. You're seeing 700, 800, 900 points. And to my mind, people are saying recession, move into cash right now. When you see such heavy volume late in the trading day with big point swings like that, you got to say to yourself, there's a lot of fear out there. It's herd mentality.
All right. Howard Rosencrantz, the one argument I've heard, and from a fellow I respect because I've talked to him over 20 years, and that is Seth Glickenhaus saying in that fear there's opportunity. And, I remembered the interview I had with him. I worked for PBS at the time, in the middle of the '87 crash week, and he was just buying like a drunken sailor. He's doing the same again. Should he?
I absolutely believe Seth and whoever has some insightful, bullish ideas about how this thing is going to evolve is absolutely onto something. I mean, the companies that we're doing research on are clearly going to be, in large part, are going to be survivors, and the stocks have discounted a severe recession. You can look out 3, 6, 9, 12 months, realize that the market within a span of 3 to 6 months is going to be looking at the comparisons in Q3 or Q4 09 versus 08.
So the market's 6 months ahead of what's going on.
Market's 6 months ahead. So sometime in the next 3 to 6 months, you're going to see the market clearly bottom, and I think we're going to move meaningfully higher, and I think you have minimal risk, and the rewards are very attractive.
All right, Jonathan, that's kind of what Seth is saying, that the market can move ahead of the economy, and the market's already factored in, as Lizzie pointed out, maybe an economic slowdown, but it's even looking beyond that, and if he's right, and the market's going to pounce, and relatively soon, I think he said next week, I didn't get the time of day, but I think he said next week, then we're off to the races, are we?
Well, Neil, if the market is a great forward-looking indicator, it would be great to start to see at least some parts of the market do well. I mean, think back even to 2000, 2001, the last recession we had. There were REITs, there was energy stocks, there were small-cap stocks. There were some areas of the market that were doing well. You know how many new highs there were today in the NASDAQ stock market? 0. That's one new high.
Interesting.
And my perspective is that the market is really starting to get used to this new socialist reality of more regulation, of the Sheila Jackson Lees of the world, of a financial system that is totally controlled by Washington instead of Wall Street.
All right. What do you make of that, Ben Ferguson? Because I know you're a big fan of the government taking over everything. How does that play out?
Well, I think part of what Wall Street's doing right now is they realize that Washington, I mean, look how many banks they strong-handed yesterday, saying you're going to take this money and you're going to do this. Yeah. And I think a lot of people right now are very scared of this election coming up because they don't know who it's going to be. You look at the ideologies of whether it be Barack Obama came, they're going to be very different for America, and they're going to be very different for Wall Street. And I think right now you're seeing people going, I just want to hold my money.
No, they're not. They're both.
And I don't want to.
No. Ben, they're not. They're both really big government advocates. It's just the size
you got to look at. Yeah, but you got to look at yesterday. I mean, when you have a guy running for president walks up to a plumber and says the plumber that he's not trying to punish him with the money he makes, but he has to make sure the guy behind him has some of his cash, and no one calls him out for that. I mean, that idea makes a lot of people, average America, go, I don't know what's going on right now, but I want to keep my own cash.
Well, I want to keep that plumber. We had him on yesterday on Fox News Channel. The guy was an instant rock star, but usually it's tough to book a plumber. That guy, forget it. All right, we're going to take a quick break here. When we come back, debating what